Tonight, as inflation continues to cool, the Federal Reserve could finally cut interest rates this month. But what does that mean if you're looking to buy a house or car and pay off credit card debt? In tonight's Affording Atlanta, our Jonathan Martin breaks down what you need to know.
It could be a window of opportunity for homebuyers ready to lock in a more affordable mortgage.
You might be able to save $100 to $300 a month if interest rate comes down by a quarter of a point or all the way up to a full point.
If the Federal Reserve slashes the interest rate, mortgage rates will likely dip and many buyers may re-enter the housing market.
The people that have been sitting on the sidelines thinking, can I sell my house and upgrade to a bigger house, now might get that housing freed up by moving to a bigger house than they have now. And for those people that were thinking about refinancing that took out a higher rate roughly a year ago, that rate, if it comes down by a full percentage point, may allow them the ability to have a slightly lower payment every month.
Ted Jenkins with Oxygen Financial in Atlanta points out the Fed will likely roll out a series of smaller cuts over the next couple years. So when it comes to credit cards, for example, don't expect to see a big difference right away.
If your credit card is charging you 22 or 24%, it might come down 1 or 2% on the credit card rate.
But if you're shopping for a car, you may be able to lock in a lower rate with smaller monthly payments.
You may start to see auto loans, at least for people that don't even have great credit, come back into that 8-9% ballpark.
And when it comes to your retirement savings, Jenkins says consider buying bonds in your 401k because as interest rates go down, the value of bonds tend to go up. Jonathan Martin, 11 Alive News.
Last month, Federal Reserve Chair Jerome Powell said the time has come for rate cuts. The Fed will meet again next week, September 17th and 18th.